Welcome to CT Expert Insights. When your business needs people it can trust, you can count on us. We dedicate ourselves to getting to know your needs and finding solutions to meet them. You'll have a team of experts backing you up.
Hi, I'm Greg Corombos. Our guest this week on Expert Insights is Eliot Gajadhar. He is Director of Product Development at 1-800-ACCOUNTANT, which you can find at 1-800-ACCOUNTANT.com. Today, Eliot joins us to discuss the payroll tax holiday and what business owners need to know about it. And Eliot, thanks so much for being with us.
Thank you. It's great to be here.
Well, the payroll tax holiday is another major wrinkle for small businesses and businesses of any size, really, when it comes to how the government is addressing the COVID-19 pandemic and the economic fallout from it. So let's just start with the very basics. What is the payroll tax holiday?
Sure. So before I get into the payroll tax holiday, I'll give you a little background of, how it came about and the reason why it was actually formed. In August 2020, Donald Trump launched an executive order, and one of the major key components was this payroll tax holiday. What it really allows you to do is it allows the employers to suspend collecting the employee portion of Social Security. So if you look on your paycheck, Social Security comes out your paycheck. What this allows you to do is, depending on the circumstances, it allows you to suspend holding that Social Security and remitting it over to the IRS.
And how much of I guess it depends on how much a business normally pays, but is this a major potential change for businesses or a relatively minor one considering their overall expenses and revenues?
It's an actual significant change, not necessarily from the business standpoint, but from the employee standpoint. So in order to qualify, the worker or the employee, for the most part, has to be making $4,000 or less on a biweekly basis. So that comes out to roughly $104,000 annually. So if they're making under that, you could suspend the remittance of that Social Security, which is 6.2%. So, just to give you a prorated calculation, if you're at $100,000 annualized, then the amount you're going to be spending is about $6,200, give or take.
And so what's the goal here from the president and his advisors here? What are they hoping the impact will be on the economy by enacting this holiday?
So the major reason they even enacted it to begin with was it was essentially a bridge before any stimulus comes through. So you may be aware there's plenty of talks right now for stimuluses that may actually get passed. But realistically, it was a bridge until a stimulus plan comes through to help employees on that case increase the liquidity. So the real purpose was essentially to have employees have more money in their pocket, just very like a rainy day fund. You can look at it that way.
It's obviously nice to not have part of your regular bill, but are the amounts forgiven or do you have to pay back the suspended payroll taxes next year or some other time?
So right now, it's actually deferred. It's not forgiven. So what happens is right now, until the end of the year, you can apply it. Your employer can apply it optionally. And it'll suspend amounts for being collected now, but then it's going to get repaid back from January 1st, 2021 to April 30th, 2021. So you can look at the first, give or take about 4 months of 2021. That's when you have to start repaying it back. But the Trump administration has already said that they're trying to look for avenues to explore legislation to essentially get the amounts forgiven in the future. But nothing has been passed as yet on it.
You mentioned applying. How does an employer, a business, apply for a payroll tax holiday?
So if they're running right now, if they're running payroll, the employer themselves can actually update their form. So when they're actually submitting their Social Security, their Medicare, and so forth over, the Social Security portion, they just will not remit it. They'll just hold on to the amounts and they just disclose on their actual filings, their quarterly forms. This is going to be a Form 941. So you're just going to disclose that, withholding the amounts, they're not remitting this amounts on it.
Is that something they're going to need guidance on, or is that something most employers can fill out? Is it pretty simple?
So if you're doing the payroll yourself, I'd recommend you contact your payroll provider. If you have an accountant, most accountants, they may be aware of the avenues on that end to actually apply for it. So it really depends how you're processing payroll, whether you're doing it yourself, or if you are have an accountant doing it for you on that end. But the payroll processors, a lot of them have got a ton of questions on this. So this is the one area where it has come up quite frequently. So I'd recommend you just reach out to them, see what steps you need to do. Usually it's just an area in the software that you just got to check off a box here and there in order to apply it.
So there's good news, bad news here, right, Eliot? Because as you mentioned, while the president and others might be trying to ultimately forgive the taxes that would have been collected during this holiday, as of right now, they're expected to be paid back in the first 4 months of next year. And so while having that break for the rest of this year is nice, it could make for a financially dicey first few months of 2021 for a lot of businesses. So talk about the pluses and minuses here, both in the short term and the long term.
Sure. So the real plus really is, let's take a look at it as like an interest-free loan. That's the equivalent to what it is. So essentially, you're not permitting payment now, you're permitting payment in 2021. So you can look at it as this is essentially an interest-free loan, at least until legislation gets passed, it gets the amount forgiven, if it gets passed, that is. The one downside really is going to be on the employer side. And the downside on the employer side is we're not sure if the employer will be responsible for the amounts deferred if the employee leaves before 2021, if they leave before April 30th, 2021, and doesn't have a chance to get it repaid back.
We're talking with Eliot Gajadhar of 1-800-ACCOUNTANT. And Eliot, every business is in a different position financially and how they look at the near and long term. So what's kind of a mental checklist or a few tips that you would have for the typical business owner to walk them through to determine whether applying for this tax holiday is the right move for them?
So a couple things. One is I'll start with the employee side and I'll start with the business. On the employee side, you have to make sure your employees are comfortable realizing that this amount right now is a deferment. So they essentially have to set aside money to, in the future, anticipate their paycheck being different in January 1st through April 30th, 2021. So if they do take the amounts, if they do apply it, keep in mind employees need to be aware of it so they don't get surprised by a huge tax bill or, in this case, a reduced paycheck coming into 2021. That's the first thing for the employee. On the employer side, realistically, the employer side has to look at the risk associated with it, as there's no guidance if the employer is going to be on the hook for the Social Security amounts. So if it gets deferred and the employee leaves before then, there is no guidance on whether they'll come after the employer if the employer is on the hook for that amount. So realistically, if you're a business owner, you should really consider that as a factor as well.
Eliot, I think you've touched on this a little bit, but I just want to make sure everyone's clear on it. Is there an opt-in or opt-out system that's part of this holiday?
Sure. So right now it's on the employer side. So it's an optional opt-in for the most part. It's not an opt-out because you have to essentially apply for it in that case. You would just apply it based off of your payroll. So the way you would apply for it is, instead of submitting the Social Security amounts, you literally just don't submit the amounts. And on your payroll forms, your quarterly forms that get filed, is going to be called a Form 941. You're just not going to put the amounts here. You're just going to put a little note, annotation. It's a one-liner saying the amounts that's being deferred. So you could say, okay, the Social Security amount was $1,000 or $2,000, whatever it is. You'll just annotate that this amount is being deferred and you're not paying it in right now.
Any last words of wisdom, Eliot?
So in this case, it's not black and white as whether you should be opting in or opting out for it. If your employee, for example, that funds actually make a difference, you don't have a rainy day fund in place, it actually may be a good opportunity to opt in. But keep in mind, there's an associated risk as we don't know if the amounts would have to be repaid by the employer if the employee doesn't repay back.
Always great to have more information on a decision this important. Eliot, thank you very much for being with us today.
Thank you. I appreciate it.
Eliot Gajadhar is Director of Product Development at 1-800-ACCOUNTANT. You can find that at 1-800-ACCOUNTANT.com. I'm Greg Corombos, and for more information on this subject, please call CT at 844-787-7782.
With 125 years of experience, CT is here to help you at every stage of the business life cycle.